Welcome to the Blockchain VC, a podcast about crypto and the digital assets ecosystem. My name is Tomer Federman. I invest in the most promising blockchain startups across the globe. I have more than 15 years of experience in tech, and before I started investing, I was on the product side at Facebook, where I led product strategy and global growth of some of Facebook's major ad products. Previously, I also lived in Silicon Valley for a few years, where I attended Stanford Business School. You can find me on Twitter at Tomer Federman. Before we begin, please note that this podcast is for informational purposes only. Nothing on the Blockchain VC podcast represents an investment or financial advice. Please do your own research. Also, if you like this episode of the Blockchain VC and want to help bring more awareness to the space, I'd really appreciate it if you can rate, review, and subscribe to the podcast. This only takes a few seconds and helps get the word out. Okay, let's do this. Really excited to welcome to the show today Evan Shapiro and Izaak Meckler from Coda Protocol. Evan, you're the CEO, Izaak, you're the CTO, and you're both the co-founders of the protocol. Welcome to the show, guys.
Hey, thanks.
Thank you, yeah.
So let's talk about your background. Evan, maybe we can start with you. Would you mind just quickly kind of recapping your background and how you got to start Coda?
For sure. So it's mostly technical, I guess. So I did a computer science undergrad, and then I did like a master's in robotics, doing a lot of work on like task planning for like a sort of humanoid robot. And yeah, after that, I was going to go do a PhD in robotics, but ultimately decided against committing like 5 to 6 years of my time to that. And instead, I came out to the Bay Area, and I just started working on like side projects. And I had known Izzy actually from high school. We had gone to high school together, and he had, in the meantime, he'll tell his own thing, but he had eventually come out here to do PhD in cryptography. And we started really just like kind of thinking about and collaborating on like what would a better cryptocurrency look like. Like there was so much hype in the cryptocurrency space, but like it didn't match like what I think either of us like wanted from that kind of technology and like what we could like think about seeing it as. And that kind of collaboration evolved into Coda.
Got it. And Izaak, what about you?
Yeah, so I I did my undergrad studying math and computer science. Then I worked for a little bit as a software engineer. And, I was really into functional programming. So I was like using OCaml functional programming as a software engineer. And then, as an undergrad, I'd always kind of planned to maybe try being an academic. So I went to grad school in Berkeley for, I was in the math department. And I thought, okay, like I'll study geometry or something. But eventually, I basically kind of wandered over to theoretical computer science and then ultimately to like kind of theoretical cryptography, basically. Although cryptography is kind of interesting because like the theory and the practice are very close to each other. And yeah, Evan and I, as he said, we've known each other for a long time. Started working together on what would eventually become Coda. Oftentimes like out of my office in the Computer Science building. And eventually, we started getting traction and, I decided to switch over to doing this full time.
And what was it exactly, Evan, I think you touched on it. What was it exactly that you saw that, like the gap you identified that, led you to start Coda?
Well, I guess I have to like set the context of like the time. So it was like early 2017. So this was like pre the crazy hype stuff, but it was a time when like, you had Bitcoin, you had Ethereum, you had a bunch of other cryptocurrencies. And there was a lot of excitement in the space around like what was possible now with cryptocurrency, but there was still like so many fundamental issues with like the technology. Like the real thing I think that got us really diving into this was, we were really closely following like the Bitcoin SegWit fork. And it just seems so silly that like everyone was arguing over like 1 or 8 like megabytes for these blocks when like that's not going to support like this good abstraction over money that we can all use like in our browsers, on our phones, like everywhere. It just is so far from like what we'd actually want to see from this technology, and yet everyone's hyping it up like Bitcoin is going to like be like the great savior of like internet finance or whatever. So I think like just like kind of being in that space, we were like just trying to think about like, well, okay, like there's all these little short-term patch solutions, but what would like a real like kind of full solution to this look like? And it was just such a fascinating problem, just technically, to start thinking about. Like, we weren't even like I guess thinking about it like, oh yeah, we're gonna like start this company and stuff. It was more just like, hey, like this is like this fascinating technical problem that like touches on a lot of things we know. Can we like kind of be really deep in thinking about it and think about what a good solution would look like?
Right. And beyond Bitcoin, right, there are other obviously blockchains, though some of them, I guess, didn't exist at the time you looked at it, and some of the side chains, I guess, layer 2 solutions that are now being worked on. Did you explore these as well, or you looked at Bitcoin, you said, you know what, like this thing isn't really going to scale to the level that's needed in order to
Yeah,
create? How did you think about that?
yeah. So I think we looked at a few things. I mean, we looked at, obviously like Bitcoin and Ethereum, and also things like Ripple that had sort of a different trust model, and also layer 2 solutions. And, I think all of these are kind of inadequate in one way or another. Ripple, obviously, and Ripple-like systems, because they're kind of not auditable in a sense, and also sort of have this closed consensus model. And then the layer 2 solutions have these really kind of complicated security properties and performance properties that are rely on maybe some complicated game theoretic assumptions, whereas you can kind of achieve the same thing using cryptography, using SNARKs in a really clean, easy to understand, straightforward way. Anything you want to add to that, Evan?
Fundamentally, a lot of the architectures we looked at were very similar, it felt. Like as you mentioned, there were some alternatives, but they all had drawbacks compared to just being able to verify things with snarks.
So for listeners who might not be familiar with Coda, what is Coda?
Yeah, it's a new cryptocurrency, and it has the property that if you want to verify it and use it like as a full node, you don't have to download the whole blockchain. Instead, you download a zero knowledge proof, a ZK Snark, that basically asserts to like the correctness of the full history. So you get all the same guarantees as if you downloaded the whole blockchain, but you get it like really, really cheaply, like in a few kilobytes, and you can check it in like milliseconds.
That's really interesting. How does it work exactly?
Well, okay, so it would be difficult to explain in detail, I think, in this venue exactly how the construction works. But there is a technology called zk-SNARKs. They have a very long history within cryptography, going back to sometime in the 80s was the first paper about something that you might call a snark. And basically what they let you do is if you have a program, any program, you can convince someone else that you ran that program and got a certain output. And you can convince that other person by sending them only a very small amount of data. So as Evan mentioned, some kilobytes, and with them only having to do a very small amount of computation. So like some milliseconds of computation. Whereas the program itself may have taken an arbitrarily long time to run. So maybe you had this program that took 1,000 years to run. It saw all of this gigabytes and gigabytes of data. And then you can convince someone, even a very sort of computationally weak someone, like a mobile phone or a browser tab or something, of the correctness of that program, the execution of that program, while only having them to do a very small amount of computation over a very small amount of data. And then essentially we apply this technology, although with an important sort of twist, which is called recursive composition, to the computation of verifying a blockchain. So verifying a blockchain, there's just some program that is called the verification procedure of a blockchain. And essentially what happens in Coda is that continually we're producing a snark that asserts that attests to the correctness of the computation of verifying the blockchain up to that point. Does that make sense? We could go into detail, but
it does.
yeah, sorry.
Couple of questions.
Please.
Yeah, so a couple of questions on what you just said, Isaac. First, when typically when I hear about ZK Snarks, it's in the context of privacy, and having privacy on the blockchain, right? Like the ZK,
Yes.
the Zcash of the world, and so forth.
Yes.
Here, if I understand you correctly, you're kind of applying the same advantages of the technology, but for a different use case.
Yeah. So maybe it's helpful to say a little bit what ZK Snark stands for. So ZK stands for zero knowledge, and that's the kind of privacy protecting aspect of ZK
Right.
Snarks. But the S in Snark stands for succinct. And what succinct means is, it's short and easy to verify. The proof itself is short and easy to verify. And so, ZK Snarks, they have this private aspect, this ZK aspect, but they also have this succinct aspect, which means that regardless of the complexity of the computation that they're telling you about, that they're attesting to, they're short and easy to verify. And so what that means is that you can use them for what you might call verifiable computation or sort of delegated computation. So you might have one powerful party who performs a computation, and then they can provide these succinct, these short certificates as to the correctness of that computation. So the succinctness is sort of, it's less important in something like Zcash, although it's sort of still important there because you don't want the proofs to be very large on the blockchain. You still want them to be as small as possible. So yeah, does that make sense?
Yeah, it does. So basically, if I'm trying to simplify that for listeners who might not be as familiar with the technology, I think what you're saying is, and correct me if I'm wrong, that through ZK Snarks, you can basically validate that a transaction occurred without necessarily having to download the entire blockchain. You can basically say, hey, look, this happened, and you can verify that, but you can get the benefit of not having to download the entire blockchain, which really makes it much more difficult to then scale it just because of the size of the blockchain when you think about stuff like Ethereum and Bitcoin. Is that fair?
Exactly. You just get this tiny little proof. It's a few kilobytes, and what it says is, I already saw a giant blockchain, and if you run over that blockchain, what you'll find is that it's a good blockchain. All the signatures and transactions are correct. There are no double spends, and at the end of the day, the set of balances of all the users is this.
Right. So how do you think about that in the context of trade-offs being made between stuff like security and scalability, for instance? It almost sounds like you're saying, hey, we solved that, but am I missing something? Like, just what's the thought process there?
Yeah, I can speak to this, Evan, or if you want to.
No, go ahead.
I guess like the kind of trade-offs are between maybe like, I think this like trilemma that people often talk about is a little bit of a false trilemma, or needs sort of refinement. So people talk about what? Scalability, security, and what do they say? Decentralization, security, and scalability. Okay, so I guess by security they maybe mean verifiability, or maybe that's part of the decentralization part. But I guess I would say it like this: like there are a few aspects to this trilemma. One is, I guess this is part of security and decentralization. You want the blockchain to be verifiable by any party. You don't want it to be sort of this like unfalsifiable, a god telling you this is the state of the world, and I'm sorry, I can't convince you. You just have to believe me, which is kind of what ends up happening with blockchains, which are sort of impossible to, or which grow forever and are impractical to actually verify. So the thing is, with the architecture that we have in Coda, anyone can verify. So it's verifiable regardless of the volume of transactions that occur. Then there's a question of sort of decentralization of block production and throughput. And there's definitely some kind of trade-off that I think is not really solvable, or in any case would be sort of in some ways difficult to solve, because you're sort of constrained by network communication, and that's kind of like, well, yeah, I mean, not sure what you can do about that. So I don't know, Evan, does that seem fair? Is there something more you want to add to that?
Yeah, I think there's, I guess, like a lot of subtlety to the trilemma that usually there's all these different aspects of it, as you mentioned. But the way I think about, I honestly think it's kind of like adding snarks into the mix kind of breaks the trilemma as it's commonly thought about. Usually, like, if you grow the blockchain really, really quickly, you're going to have less decentralization. It's going to be harder to verify. And then if you keep, if you want to keep it super decentralized and easy to verify, you have to keep the blockchain really, really small. And snarks kind of break that tension between those two things. And so it kind of solves a lot of the issues to do with the trilemma. There's still a lot of remaining questions, but when you add snarks into the mix, it gets you way past the constraints given by the trilemma.
Right. So sounds like when you think about the blockchain trilemma, there are some trade-offs for you guys on the decentralization part of it, but you gain a lot of scalability as a result, which makes a lot of sense, right? I tend to think that, different blockchains probably have different use cases, and some might not need to scale as much as others. But in your case, sounds like you're solving for a different use case, which means you need to kind of focus more on the scalability aspect of it. Is that fair?
I guess maybe I would phrase it slightly differently.
Okay. Yeah.
I think the important thing for us is, like, when we say decentralization, we think that means is like everyone should be able to get like access to the chain in a way where, like, everyone in the network should have equal access to understanding what's going on, trusting the state of the world, and not have to rely on any centralized third party to be able to know what's going on. I think Coda solves with snarks this problem very elegantly through snarks. So you kind of do get decentralization and scalability. That's I think my goal anyway for the project is, like, it should be really easy for everyone to access.
Yeah, to clarify, I don't mean there's no centralization, right? I just mean, like, there might not be as much as, let's say, like, in Bitcoin's case, when you have like tens of thousands of nodes running. But yeah, I get that it's not a centralized solution.
Well, I would say that it's more decentralized than Bitcoin in the sense
interesting.
that
okay,
in the sense that for example, you can talk about decentralization of, there's sort of like two, I guess, aspects of decentralization. You can talk about decentralization of verification. So how how many people actually have the resources and necessary to actually verify what's going on in the network, and decentralization of block production. So just for Bitcoin, I guess you could say block production is somewhat decentralized, although I think most of the hashing power is probably concentrated in just a few mining pools. So I don't know. And verification is sort of somewhat decentralized. If you run your home computer for a few days, connected to the internet, or maybe a day or something, you can probably verify the network. With Coda, I would say block production, well, it sort of remains to be seen. I mean, it depends strongly on like what the token distribution looks like, but I expect that it will be at least as decentralized with regards to block production as Bitcoin. And with respect to verification, much more so, because any device, practically, like a cell phone even, can fully verify the chain's history without having to trust miners or trust Coinbase or whatever.
Okay, so you don't see any trade-offs when you think about the blockchain trilemma for you guys?
So for sure there are trade-offs between I would say decentralization of block production and transaction throughput. I would say there are some trade-offs there which are just dependent on the realities of communication over networks, because if you want to have more people who are communicating with each other, it's just it's going to put more load on the network. You're not going to be able to push as much data through as quickly. So it seems to me, but with regards to decentralization of verification, Coda is really the kind of best architecture for that. Evan, is there anything that you would add to that?
Yeah, I guess it's kind of a tricky point, because usually cryptocurrencies are usually thought about in this kind of domain with scalability and decentralization, and like we have to trade off, and like what's the right balance here. But the beautiful thing about snarks is I think they let you get both in a way that's like really substantial and goes beyond like what's classically considered possible with blockchains. So we kind of do get both in a way that's like really substantial, and it's
I would
Okay.
just maybe I would maybe add one more thing, which is you really, if you want to build a system that's going to be like a source of a source of truth about information that's going to have a substantial impact on people's lives, you want that source of information to be as resistant to tampering as possible. And right now, with, especially if you imagine current blockchain architectures scaled up to high throughputs, they have a really kind of glaring point of centralization in terms of verification. So, if you have a blockchain that is processing a lot of transactions, has a lot of throughput, most people are not going to have like a super big computer that's able to verify all the data that's coming through the blockchain. Most people are going to be interacting with it through mobile devices or a browser or something like that. And so, if you want to attack that blockchain, you can just sort of go to this weakest part, which is the fact that on the end, for the end user, most people are not really verifying anything. So that's obviously bad. But what's really amazing is that snarks actually let you kind of circumvent this issue, where you can make it so that even that sort of final journey of the information from the blockchain to the user can be totally verified with a tiny proof that even like the weakest device can check.
And this becomes more of an issue as time goes by, right? Because blockchains become even bigger and bigger, and it's becoming even more and more difficult to make that validation you're talking about. Now, one thing I find really fascinating about what you guys are working on is that when you think about the consensus algorithm, right, my understanding is on Coda, participation is really proportional to how much you stake. And then by participating in the process, basically users help Coda compress when they participate in that snarking process. Can you guys talk more about that?
So it's proof of stake. And with the component that the network is working together to make this giant snark proof. Like Izzy mentioned before, that like you can imagine that if you have a huge computer, it can produce a snark that can be cheaply checked. In this case, that huge computer is kind of like the whole network. The whole network works together to update this proof that then becomes like the snark that everyone can use to verify the chain.
Yeah, so in terms of the consensus protocol, as Evan mentioned, it's proof of stake. It's a straightforward proof of stake protocol, which is a new, like sort of an updated version of the Ouroboros protocol for our specific context of having a succinct, tiny blockchain, constant-sized blockchain. Then there is this sort of orthogonal component, which is the snarking that you mentioned. So the consensus nodes basically confirm transactions, so they produce blocks, but then they don't fully compress those blocks. So they don't take all the transactions in those blocks and compress them all down into one snark. They basically broadcast those transactions to other nodes who then sort of collaboratively work on compressing all of those transactions into a tiny snark, which then gets merged back into the main sort of snark, which represents the blockchain. So the whole thing will then have constant size. But so there is this sort of separate role of nodes on the network of snarking nodes, which potentially are different from consensus nodes, who are just working on producing snarks to compress the history of the blockchain.
Interesting.
So yeah, sorry.
Yeah, go ahead, Isaac.
Oh no. I was just going to say, so there's kind of like the main snark of the blockchain, which represents almost all of the history, and then there's this like little finite tail of transactions which have yet to be compressed, which the network in a distributed way works together on compressing.
Right. And you mentioned earlier, yeah, sorry, go ahead.
Oh, and I was just going to say, and people can run nodes to get fees for doing that work of compressing that tail of the most recent transactions.
Got it. So, and you mentioned earlier mobile usage. Is the goal here really is to kind of optimize for the mobile use case?
So I guess I would say it like this. The goal is to kind of democratize overall access to the information of the network. And most users are going to be on ultimately interacting with some application from a mobile or possibly from a browser. So you really want to make sure that those users are going to actually be able to get verified information from the blockchain.
Yeah, that's really cool. And where are you in terms of the product itself? I know you recently rolled out phase 3 of your testnet. Can you talk more about that? I mean, do you see, I assume you're already starting to get some feedback. Curious how adoption has been like so far.
Yeah, so we've been in testnet a few months now, and we're at this point we have a protocol that like it has most of the features you would want. It's pretty reasonably stable, depending on the release. And there's a few more features we have to get into it, but yeah, we've seen a lot of really good traction so far, and a lot of really cool adoption from really technical like kind of node operators and other like people who follow cryptocurrency. We think right now that if we count by like number of individuals participating, we're like one of or maybe the largest testnet out there right now. We have had over like 300 people like simultaneously connecting to be block producers on our network, and I think close to like 400 or a little more than 400 uniques ever connect to it, which is really awesome. So yeah, I mean, the stage we're in right now really is just kind of like building like this like core set of like people that are going to be running block producers on the network, because that'll be kind of like the core of the consensus to make it really decentralized. Like I mentioned, this 300 number, we want to get that up to like well over 1,000 by the time we launch. We're also running this program right now called like the Genesis program, where we're trying to onboard 1,000 block producers before mainnet with like some fairly substantial token grants provided they're staking. So we want to give like everyone the opportunity to like get involved through that, and then like through that build a really decentralized block consensus layer.
Yeah, that's really interesting, because one of the things I think is really important, right? Like we see obviously a lot of different layer 1 blockchains emerge over the past like couple of years or so. And I think oftentimes kind of when I speak to entrepreneurs, a lot of them really focus on the tech specs. And that's great. That's really important, obviously, but you don't necessarily win just on that, right? Like when you think about Ethereum, is this the best layer 1 blockchain? Probably open for debate. But I think what Ethereum has going for it is just, the ecosystem, right? Like you have so many developers building different decentralized applications on top of the blockchain. How, beyond the program that you mentioned, what's your thought process there? Like how do you go about building that ecosystem that you just described, that you've started doing, in order really to drive adoption, which I think is probably as challenging as being technically superior to other solutions out there?
I totally agree. I mean, I think the most important thing that we're focused on right now is like what the ecosystem will look like. And this whole program I just mentioned, and our whole focus on like improving the consensus layer, is about like building a community of people that like really help run the network, because it really comes down to the community at the end of the day. Right now we're focused on node operators, but that will like expand into like folks with just like just kind of like general like interest and ability to contribute to cryptocurrency, as well as like developers down the road as we get closer to mainnet.
Yeah.
Oh, just want to mention, like, I think you will find like a lot of protocols talk about like throughput and like like latency, and those things I think are super super important, but they're not things that we've been like and I think we have fairly good specs for them, but they're not like the things that we've been like kind of focusing on as I think there's ecosystem things that I like talking about more.
And do you have a timeline for mainnet? Like, when do you think you guys are going to launch the mainnet? Do you have a sense of that?
A sense, yeah. So we're in like this phase 3 right now. Phase 3 is like focused on like node operators. Like phase 4 is next. Phase 4 like is going to focus on like more like the economics of the protocol, like increasing the node operator set, like developers, and then we're going to be running an adversarial network, which will make sure the security is really good, make sure that we've properly tested all components, and then we'll launch mainnet. So I want to say this will be later this year, and I think we're on track to do that. But people should just follow along on our testnet because like a lot of exciting progress is happening, and we're marching towards it.
Right. So I think scalability, is super important. Obviously, in order for crypto to go more mainstream, that's a must. But so far, when we look at the dApp ecosystem, most dApps really haven't taken off yet. So, scalability hasn't necessarily been a critical issue yet. What else are we missing? Like, why haven't we seen, more dApps succeed? What's your guys' take on it?
I have two components. Izzy, feel free to add anything. I think one is just like that cryptocurrency so far has been sort of difficult to use and access. I think there's a big difference between maybe what it was like to program for the internet in early 1990s versus today. I think crypto is in a similar place where it's just so much harder to get started. And yeah, I think the other thing maybe is just that it is so early. I think that people are still kind of getting used to and figuring out this technology.
I would agree with that.
Yeah, makes sense.
I would just add, I think a lot of the most compelling use cases, at least the ones which are personally compelling to me, it's not entirely obvious that there is sort of a let me put it like this: there are use cases that I can imagine and that are very compelling to me, which to me obviously are extremely valuable in the sense of providing actual value to people, improving some aspect of people's lives, but it's not so clear what the business use story would be for them. So it's not so clear how they could be profit generating activities. Yeah. So for example, you can just think about even really basic things like cryptographic technologies like encryption. What is the profit generating activity of encryption? It's not totally clear that there is one, except maybe for improving internal communications or preserving communications between companies or whatever. But there's an extremely socially valuable application of encryption, which is to allow people to communicate with each other privately without fear of being surveilled by powerful actors. And encryption was a technology that I guess was not developed for a profit-seeking activity. It was reasons it was developed by the military for quote-unquote national security reasons. I think some technologies in the crypto star, asterisk cryptocurrency cryptography world are kind of similar in that they are probably potentially extremely socially valuable, but it's potentially not obvious what the sort of profit generating value of them is.
I think that makes a lot of sense, and you guys both brought up some really good points. How do you think about monetization? What's the business model? Is it about the cryptocurrency appreciating in value over time, or other ways that you're thinking about monetizing Coda?
I guess there's a few components possible to this question, but I think when we think of what's just the value provided by the core cryptocurrency, that's kind of the main thing that I think will lend into the protocol having value, people using the protocol for things that have value, and then I think it goes back to something you mentioned earlier around I guess, and also when we started the project, I think Bitcoin's original dream was was going to be this internet money layer for the internet. And I think Bitcoin's done an incredible job, succeeding as this kind of digital gold. But there's still this dream, I think, of this programmable money for the internet. And I think that Coda has a really good chance of being able to execute on that super, super well and be this really easy to access money that you can write programmable rules around, that you can access without any middlemen or any like big full nodes. It just works on your browser. And I think there's a lot of really exciting things to do once you have that, and things that also like have clear business cases today and can be really exciting out the gate. I would add also, like, I think that in the long term, we're also super excited about some of the things that Izzy was mentioning. Like, I think that once these platforms exist and are accessible by everyone and they're easy to use, like, and you have the option of switching to something that like respects your privacy, something that that you can like trust with your data, something that can add value to your life in a way that's not going to be exploitative, that people will start using it. And I think that the easier this technology gets to use, the more we'll see of that as well.
Yeah. Isaac, anything to add?
Oh, I mean, just for the interest of the listener, I can maybe just mention some specific applications that I think would be really interesting that you could build with technologies like the ones that are using Coda, and even Coda in the future. You could have things like a website that proves to its users that it's not using old data, so it's sort of deleting old data, or at least not using it when it serves you a web page. So like maybe I love Facebook, it's great. I don't, just by the way, but for the sake of the story, let's say I love Facebook, it's great, but I really wish that they weren't hoarding my data. So it would be cool to have, for example, a social network which sort of provably shows to its users that it's in some sense not using that old data. And you could do that with a sort of snarkified blockchain like we have with Coda. Other applications that are interesting are things like verifiable machine learning. So maybe you have some machine learning training that you want to do, but you want to make it possible for some kind of auditor or like overseer to sort of know that some kind of regulations were followed in how that model was trained. Maybe certain kinds of examples were excluded from the training set, or certain bias prevention techniques were employed during training. You could use this technology of zk-SNARKs, especially paired with a blockchain, to be able to actually like convince that regulator, that overseer, or even the end user that in fact those guidelines were followed, that they excluded some user sensitive data in training the model, or that they applied bias prevention technique X in training the model. So I think these are sort of the very socially valuable use cases of SNARKs, things that SNARKs have this sort of democratizing or power leveling feature, which is that they make it possible for computationally weak computers like phones or just people to have unlimited oversight over computationally powerful actors like large companies or the government or whatever who can employ really powerful computers. So I think those kinds of applications that sort of leverage that ability to equalize somewhat the power relationship in terms of oversight over information are some of the most exciting ones that I hope to see developed in the future.
These are definitely some really exciting use cases. Whenever I hear about programmable money and some of the applications you just mentioned, it's so exciting, right? I mean, when you think about kind of the possibilities and the opportunities that it opened that really couldn't exist before. And curious, one of the things, when I don't know if you have a similar experience, when I talk with people who are not that much into the weeds in crypto, especially when, mentioning things and the possibilities that are enabled by technologies like zk-SNARKs, one of the things that typically comes up is, right, on the flip side, how do you make sure it's compliant, and how do you make sure that technologies like this aren't used for illegal purposes? What are your thoughts on this? I don't know if you've kind of encountered this issue as well.
I would say like how these technologies end up being used is mostly a question of power and political struggles and negotiations. So, I mean, you can sort of look back to maybe the history of encryption for some analogies where the U.S. government had developed this technology, and they were using it freely to conduct war, but it was considered sort of a national secret that you weren't allowed to export because then other enemies of the state could use it, or there was a lot of hand-wringing about terrorists or malicious people using it to communicate with each other online without being surveilled by the state. So yeah, I mean, ultimately, every technology will have some socially positive and useful applications, like allowing people to communicate without being surveilled. Sometimes those applications will be favored by the dominant power structures. Sometimes they won't be. There will, you may have some negative applications which are favored by the dominant power structures, some which are not. There will also be struggles over that. So it's a political question, like with any technology, over how we as a society choose to condone its usage in one way or another. Yeah. Evan, do you have anything you want to add?
A little bit. Like I guess I think that cryptocurrency has the potential to be really good for people, and also has the potential to be bad. I think that, for example, like it would, if a collection of Silicon Valley companies ended up controlling a large portion of the internet economy, especially in lower middle income.
Geez, imagine that, right? Imagine a handful of Silicon Valley companies controlling a large majority of the internet economy. Sorry.
Yeah. True. Good
Surely
point.
it can't happen.
But surely no. I think there's a lot of ways this technology could be used in a way that's bad. But there's also ways it can be used that's good, and it's up to us as people that are helping develop cryptocurrency, to the listeners who are we're looking at which cryptocurrencies they're interested in and going to support, to choose ones that hopefully are moving in a direction that is going to be good for the world. And we're trying to do that, but hold us accountable also. But I think, the effort to have a more democratic chain is in that direction, and I think it's something we should all be thinking about as an industry.
Yeah, exactly. I mean, it's something that's always on my mind, at least. Again, as an industry, how do we do a better job just easing some of these concerns? Because I feel like the better we do as an industry in communicating, the benefits and mitigating some of these concerns, the better, or I guess the faster we can go towards more mainstream adoption, right? It's really difficult without the buy-in of regulators, certainly in places like the US, to get, significant traction. Certainly when you think about the more institutional side of things. That's always on my mind, and I'm sure yours as well. I want to switch gears a bit. One of the things I often ask guests on the show is about fundraising, right? Just because there's a lot of, entrepreneurs listening to the podcast and aspiring entrepreneurs. Curious if you guys have, any best practices or thoughts about this. I know you've been successful, right? You've raised, $18 million or so. Anything you can share with the listeners about your learnings from this process and engaging with venture capitalists?
I guess maybe the one thing I would say is I think that we've done this a couple times, and we put a lot of work into it, but I think there's people out there that are way bigger experts on it than we are, and I think that reading their material is probably the most productive way to go about learning that sort of thing. I think there's a lot of VC blogs, there's a lot of books that have been written. I would really recommend before embarking, you kind of just read all those resources and just kind of learn what the field looks like and learn what you're getting into and learn what is a term sheet and all that kind of thing. And then I guess you're going to spend a lot of time with your deck. You're going to spend a lot of time making sure that you really understand the space, understand what you'll be building, understanding the field you're getting involved in. And I would also say if you have the resources, it's great if you can spend some time before going out and fundraising, spending some time building the most MVP of MVPs you can, the most basic understanding you can of the product. That'll help a lot in terms of like knowing like how to pitch and what you're pitching, as well as like knowing what it'll look like for you to get deeper involved in this in the project.
Yeah, makes sense. And given that your product is pretty technically complex, did you have to spend a lot of time just educating potential investors about, the benefits of Coda and how it differs from other blockchains out there? Just curious, like how much time did you have to spend about, here's what cryptocurrency is and why it matters versus here's what Coda is, and really going into the nitty gritty details of it.
So a lot of our investors were pretty knowledgeable about crypto in general, especially our early investors. But I will say that one thing that was really valuable was we had like this slide deck that had sort of like kind of cartoons explaining the whole protocol, and
Love
and
that.
I think that was extremely helpful actually, in just kind of like very clearly and quickly like explaining like, okay, what's the deal, what is this about, why is it interesting, why is it different, blah blah blah. Yeah, so like if you have the time to like spend drawing making like a few frames to explain your product, I think that's like a good thing to do, because Evan once said that like humans like have our people like can really easily understand things visually, a lot more easily than they can with words. And so I think like compressing it down into a little comic, into a little story, is a good thing to do.
That's a really great point. I really like that. One more question before we wrap up. We talked about some use cases that you guys are excited about. Wondering, kind of, when you look at the market more broadly, are there any specific, obviously beyond Coda, are there any specific, projects or developments you're excited about in the whole blockchain realm?
I'll just say briefly. I think that in general, like a lot of the new projects that are launching right now, whether things that are new on Ethereum or some of the other new like layer one projects, I think there's a lot of really exciting work going into those, and there's a lot of like people that are like really thinking deeply about specific problem areas. Like I think Cello and Near and I'm gonna miss a bunch here, but there's like a whole bunch of these. Like I would even call like but Maker and Compound in this category as like things on Ethereum that are really exciting right now. That I'm just like really excited to see where they go and following closely.
And actually, one more question.
Oh, do you mind if I add something to that?
Please do,
Yeah.
Isaac. Yes.
So I would say like obviously, well, maybe this is only obvious to me because like I'm so like it's such a niche for me, but in the last like 6 or 7 months, there's been an enormous amount of development in SNARKs to make them a lot more efficient, have a lot more practical in many ways, and so I think the work that the people on the Zcash team have been doing, the work that people like Ariel Gabson and people from the Berkeley Computer Science Cryptography Group have been doing is really amazing, as well as Starkware. And there are some sort of more, I would say, marginal projects, which I don't really expect to be that successful in the short term, but have some kind of long-term interesting ideas. Like there's something called trust lines, which is sort of like a kind of like everyone can kind of make their own money. It's sort of like a debt-based, personal debt-based currency, I guess you could say. I think that has a lot of interesting sort of sociological ideas maybe in it, and in the long term could maybe be an interesting technology, but in the short term, I'm not clear.
Yeah, some really exciting projects there that you mentioned. Ariel, I think, is working on Aztec. I just had their CEO on the show as well recently. So some really interesting projects there. So one last question, actually, I wanted to ask you: how is the blockchain / crypto ecosystem in the Bay Area? Do you see progress there? Like, I'm just curious, like, if you compare it to, like, say, 2-3 years ago, do you see more excitement, less?
I feel like it's really actually kind of developed. I think there was like this ridiculous kind of crazy like hype in 2017 and 18 where like there were a lot of people in the Bay Area working on crypto, but when I think about the ecosystem now, I feel like it's really developed. Like there's so many people that I think within a few blocks of our office, there's like half a dozen or probably close to a dozen crypto companies. And what that means is that there's a lot of kind of like people that are thinking really deeply about the technology, thinking deeply about execution, all kind of collaborating in one way or another with each other. And I think that's been a really kind of productive environment for us, and one that has been fun to participate in.
Yeah, I would just add that it definitely, the ecosystem as a whole, the local kind of crypto ecosystem as a whole, really benefits a lot from the proximity to Berkeley and Stanford, because there's lots of great researchers there, and and conferences that they hold where there is interaction between the industry and academia, and there's collaboration, and so that's I think been very valuable as well, and has really developed a lot over the past couple of years.
Yeah, makes sense. The proximity is so crucial, right? Like, I remember before I went to Stanford, like I didn't fully, I think, understand that until I got there. And then it just like, the ability of some of these folks to just get in the car, drive 5, 10, 15 minutes and go on campus, and vice versa, right? For people from, either Berkeley or Stanford to go to these companies, it's just invaluable. Isaac, Evan, thanks so much for coming on the show. Really enjoyed the discussion and learning more about Coda, and appreciate you taking the time to share more insights.
Yeah, thanks, Tomer. It was fun.
Yeah, thank you for having us.
Thanks for listening. If you like this episode of the Blockchain VC and want to help bring more awareness to the space, I'd really appreciate it if you can rate, review, and subscribe to the podcast. This only takes a few seconds and helps get the word out.